So we now know how the first half ended and the second half started. The question for investors now is, what's next? Bob Pisani takes a look at the issues stocks face that could be market movers in the second half of the year.
It's the start of the second half of the year, and after an already tumultuous first half, the big question is, where do we go from here? The main issue is the tension between the bulls, who insist on TINA, there is no alternative to stocks, and the bears, who believe valuations and earnings estimates remain way too high and that the markets will move lower in the second half of the year. TINA is not quite right. There are alternatives. There always has been. Money continues to pour into high-yield and municipal bond ETFs, and of course, there's always gold. Gold hit a 2-year high today, and that's giving a major boost to gold ETFs like the GLD. As for earnings, while they will not collapse, estimates for an increase in the second half are dependent on a lot of things going right. There's two big issues. First, lower interest rates and a strong dollar. Lower rates for longer will likely be a big problem for banks, particularly if the yield curve remains relatively flat, because the banks make money on higher rates and on a greater difference between long and short-term rates. A dollar spike is another big issue. A spike in the dollar at the end of last year turned into a huge problem for materials, industrials, energy, and many technology stocks, all of whom cited dollar strength as impacting profits at that time. Besides earnings, there's plenty of other events that could move the markets, like the U.S. presidential elections, all of which could throw an additional monkey wrench into the markets. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.